We're going to start, and because of the waiting of the audience, this chat, if you want, will be weighted towards the dairy industry because that's where most of the interest is. And I know a lot of you would have woken up this morning, some of you at 4:31 a.m, no doubt, eagerly awaiting what was hoping to be an improved global dairy trade option. It didn't happen. Just in case you haven't caught up with this one, it's as flat as a pancake. It went nowhere, and whole milk powder went down 4.5%, which has obviously wiped out some of the gains of the last few auctions. So there's my opening shot to you, Hayley Moynihan. Why are we not seeing an improvement?
We still haven't really seen demand and supply rebalance, Jamie, and that's still playing out in the auctions. And also bearing in mind that at the moment the contract period for those auctions is actually getting into the peak of the New Zealand season. So buyers are sitting there pretty comfortable that actually they've stocked up well and prices have been cheap. And they know that that spring flush comes out of New Zealand almost regardless of the weather and regardless of the price. So no real incentive to start bidding up prices for product to be delivered through September, October, November. What was encouraging out of the auction was that actually skim milk powder prices went up very slightly, but skim milk powder's weighed pretty heavily down by those stocks building in Europe. So the fact that we saw a little tick up in skim milk powder is reasonably encouraging. But no surprises, we're not seeing any major changes in prices at this time, and we wouldn't really expect to until we start to see those contract periods move out into 2017.
Yeah, my initial response was disappointing, but not really surprising. And you and I were talking about over breakfast. Rachel Hunter's here, weren't we? What did you do over breakfast?
We were, and look, that is that it won't happen overnight, but it will happen. I think she's famous for that one, and that's really still the case here. Is that it is going to be a long, slow grind unless we see something particularly unexpected. And of course, we always will see things that are unexpected. We just don't know what they will be. But in the absence of that, it is going to be a long, slow recovery.
Now, the other thing we were discussing over breakfast, or one of the many things we were discussing over breakfast, was the mood at the Fieldays yesterday. And I'm sure a lot of you guys were there yesterday. You're going back for another dig today. And it wasn't one of overriding pessimism. In fact, I know, for instance, at the country, our vehicle partners are Volkswagen. I think, Fish, correct me if I'm wrong, they had a record day one, didn't they? So there are some people doing quite well out there, quite nicely, thank you, apart from if you're a dairy farmer. Most of you guys in the audience are. If it helps you on feeling your pain, I've got a share in a dairy farm in Southland, which means I have to work harder in my day job to fund that farming habit. But the interesting thing is, we had a lunch break yesterday and we sat down at the table and a couple of guys joined us. We got into conversation with them and they were both tradies from Tauranga, and they were over here to buy, one was buying like a hydraulic lift for the back of his truck. He said he's getting a bit old, he didn't want to lift stuff. But they were doing incredibly well. So Hayley, putting the dairy thing to one side, there are sectors of the economy doing well.
Absolutely, and I think we need to bear that in mind. The New Zealand economy, while it's heavily reliant on agriculture and dairy in particular, there's other sections that are doing very well and benefiting from the fact that resources have been freed up in some places, that actually businesses have started looking at work outside of perhaps dairy and particularly construction and dairy, and have found that there's plenty of business to be done, particularly around the very fast-growing sort of northern North Island region, but I also see it where I live in Canterbury, that trade is generally going very well, and particularly construction, and that helps build the economy. But it's also benefiting from other things we're seeing, such as lower interest rates, where it does encourage investment and it does stimulate investment in all areas of the economy.
Let's divert and have a look at a couple of macroeconomic issues, if you want, things that are perhaps clouds or dark clouds on the horizon for us here in New Zealand. At the moment, or next week, is it, we have the vote on Brexit, whether Britain exits the EU. I note that in the past week we've hit 50, or gone over 50 pence against the British pound. And the other one is the Federal Reserve, who have been talking for ages about lifting rates, but they're not going to be doing it, it looks like, in the near future. That is obviously going to have upward pressure on our dollar. So if we are getting some gains with commodity prices, are these going to be gobbled up by losses on foreign exchange?
Yeah, these are one of the things that will really change the dynamics potentially for regardless of which sector you're in. And not many of us in this room are old enough to remember when Britain entered the common market, which was back in the late 60s. But as someone who studied economics, that was a huge shock to the New Zealand economy when all of a sudden that sort of parental guidance and parental buyer of all of our products all of a sudden actually wasn't that interested and we had to renegotiate. Now Britain leaving that common market could well be just as dramatic, and at the moment it's on a knife edge in terms of how Brits will vote, and it could go either way. And there's the immediate things that you think of in terms of a weaker pound impacts obviously our lamb and sheep meat exports, which is still the most valuable market. So that's clearly a direct potential impact. And things like wine and apples and other horticultural products that go into Britain directly. But actually it's also worth thinking about what happens when, if that happens, the euro weakens. And the euro weakening potentially is a bigger impact, because that would be across all our sectors. All of a sudden Europe becomes much more competitive on the export stage for dairy, for kiwi fruit, for apples, for anything that they're looking to export. And that potentially is a bigger impact than purely the changes in Britain alone. And there's no sort of certainty that that will happen, but if we're talking about what could be game changers here, that's certainly one of them, depending on which way Britain votes next week. Something to certainly keep an eye on, because as we've seen through periods of a weak euro, all of a sudden it gets them interested in the world market in a bigger way than what we would see typically when the euro's a bit stronger. So one to watch next week and one we should all pay interest in, even though it seems as though it's happening a long way away and perhaps a bit irrelevant.
So what about the Federal Reserve one?
Federal Reserve, yeah, not any change expected there. And I think there's always this watching brief on what the Federal Reserve does in terms of interest rates and therefore impacting again currency. I think in the US the bigger potential impact is really what happens in the presidential elections.
Okay, one more for you, Hayley, on the international stage. What about the elephant in the room with the bad haircut, Donald Trump?
Yeah, it's interesting. People, we had an economist out from Hong Kong earlier this year, and he said talking about Donald Trump being president used to get sort of raucous laughter in a room. Now it's very nervous and quiet laughter, because there is a very real chance that could happen, and what that would do for not just US politics but global politics is a big, not necessarily a concern, but it's a big wild card. And not just in the US, what we're actually seeing is politics changing quite dramatically in a number of different countries, and we see it in France as well, and certainly in the Netherlands, where these, shall we say, wildcard politicians are gaining more and more traction. And again, in terms of sources of volatility and impact, politics is going to be a big one, because with the world economy under pressure, all of a sudden people that you would never think get elected actually can often.
Let's go back to our domestic economy, the official cash rate. No change in June. They're all telling us that there will be at least one more cut before year's end, maybe down to 2%. Do you see it going lower than that?
It's difficult to see it going materially lower than that because of the knife edge the Reserve Bank is treading, which is trying not to overstimulate the housing market. And that is still a concern from the overall economy point of view, when we have still got strong growth in housing and certainly a strong appetite for borrowing in that market. So that's a fine line to tread, but certainly the longer that economic growth is under pressure and certainly inflation is not strong, then the greater that chance is. But I think it's more likely to be relatively modest, and I'd expect we'll start to see some signs of recovery through certainly through the dairy industry by then, that may include a drop below 2.
This time last November 2015, just back from the Rugby World Cup, what a great trip that was. But anyhow, we wandered up, you and I, and no doubt a number of people in this room were at a lovely function centre in Matamata, was it? Matamata, yeah. And it was a guy by the name of Tim Hunt there, who's your global dairy trade expert, and he told the farmers gathered that things were going to come right in mid-2016. Well, we're in mid-2016 now, things haven't come right. When are things going to come right, Hayley? Seriously, that's the $64,000 question for all these dairy farmers out there in the audience.
Yeah, and look, it is pushed out further, there's no doubt about that, in terms of into 2017. And I guess we did, at that point, I think we were below $2,000 a tonne for whole milk powder. We've at least got above that, but we certainly need to see it get above 3. And we still think that that is probably, the best part of 9 to 12 months away. The reason it's been slower and taking longer has been around the volume and continued strength of milk production coming out of Europe. And indeed from here, it's been interesting to see just yesterday the latest numbers for milk production out of New Zealand released. Production only dropped about 1% last season. Just incredible given where the milk price is. Again, this time last year, we were looking at New Zealand milk production thinking, well, you know, could be anywhere from 7 to 10% down. Knowing supplementary feed would come out, knowing cow numbers had dropped, but some good weather and the actions of good farmers has actually seen that production stay up. So the world market's factoring that in. Milk supply is still out there, and globally farmers just haven't turned off the taps.
This dairy downturn is now, without doubt, a 3-year event. Let's hope we can ring fence it at 3 years. Are we going to see pressure from the banks, and this is not Rabobank, this is right across the board, are we going to see pressure from the banks on farmers to get out?
Look, I think that will come, and probably already has come for some. I think we will see it be steady rather than dramatic in terms of the pressure, because timing's everything, and no one wants to see any sort of dramatic collapse in land prices, sort of a dramatic exit of farmers off farm. And so I think what you'll see is what's already happening, and that is that those people that are under significant financial stress are looking and being quite creative about options available to them in terms of either outside investment, perhaps restructuring businesses differently, maybe selling some assets and holding on to others. And I think we'll see that continue. What I would expect to see more of is, as we actually see dairy prices recover, is that is when we will actually see more activity, because there'll be less concern about flooding properties onto the market or actually creating disruption in the market. So I think that's potentially when we'll see more impact, where people have sort of held steady and managed to get through this period, but know that for the long term that restructure is required or assets need to be sold.
There's an old saying, never waste a good crisis, and I'm sure that a lot of people in this room, because you're leading Rabobank clients, are probably, I'm guessing some of you are reasonably well heeled. Does this downturn present a real opportunity for strong players?
Absolutely it does, and I think we've already seen that. We've been pleased to support our clients in terms of working capital requirements and increased facilities required, but actually what we're seeing is that many of those facilities aren't actually fully utilised, and that shows the actions that have been taken on farm in terms of actually reducing costs and managing things very well. But I think what it also shows is that there is still capacity in the industry to invest or to reshape. What I think we didn't see in the last downturn that our compatriots in other countries around the world did was we didn't see any actually reduction of debt across the whole industry. What we saw in the US when they went through a severe downturn in 2012 and into 2013, and what we saw in Australia coming out of the financial crisis was that farmers actually repaid a lot of debt, and they invested in their businesses to ensure that they weren't exposed to things like volatile feed prices or other key inputs going forward. I'd like to think that we will see some of those lessons come out of this one, and that we'll actually hold on to those gains as an industry, which we didn't tend to do in 2009 and 10.
Are we going to see a paradigm shift in the cost structures, and you've alluded to this, in dairy farming across the board? And the reason I say this is we were having dinner last night with the Crow Horworth team, and I'll be speaking to a guy on the show today called Hayley Moynihan. I'm sure a lot of you people know of Hayley. And he was having a debate with another one of his Crow Horworth guys, a guy by the name of Craig Sanders, over dinner last night about the new break-even for dairy farmers. I mean, Dairy NZ is saying, what, $5.25, $5.30 or something, Hayley? Hayley Moynihan is now arguing that the new break-even is $4.60. Do you buy that?
Oh, look, I hope he's right. Certainly there's some that can get to that level. I think we see it probably less in the South Island, but more potential in the north, where self-contained and often slightly smaller units. But look, I think if we do see a sustainable lower level of break-even cost, then that's a very healthy sign for the industry. What that number ended up being, I think it's all very well to get there this year. I'd like to see a number like 460 maintained when milk price is back up to 6 or 6.50. That would be a sign of a very healthy industry.
So, dairy or farmers across the board have a wonderful habit of capitalising gains, don't we?
Very, very good at it, and I think probably almost better than most around the world. And that's also part of why when we enter downturns, it becomes a little more difficult because those tend to not go away in terms of property values and asset values. They've been capitalised and they don't go backwards very often, every now and again, but not very often at all.
Okay guys, I know that some of you need to get to the field days, you've got a busy day in front of you, but what we're going to do now is take a few questions from the floor. We've got some roving mics. We won't ask Tony to wander around with one. You'll never get to the field days. So what we'll do is, just put your hand up and fire a question at Hayley.
Hey Hayley.
Hi,
I haven't seen you for a while, but hey, question for you. The bank's always saying the recovery's coming 9-12 months out. 9-12 months out. Could you just be a bit more definite on that, or not?
Yeah, look, you've got a great point, and I know we've had this discussion before, probably about 18 months or 2 years ago now.
2 years ago.
Yeah, and...
Can I just remind you of something as well, Hayley? You were predicting, you went through everything. You predicted 2 years ago, exactly this time of year, Rotorua, the payout was going to be in the late 5s to early 6s, and Europe was not going to be an issue when the quotas lifted.
Yeah, yep, absolutely, because we'd seen that the volumes coming out of Europe were expected to come out over a shorter period and largely be required by the market. What wasn't factored in at that point was Russia going to Europe. So I think that was in the June we were talking, and of course in August Russia shut the borders. So all of a sudden 2 billion litres of milk bang like that needed to find a home. So that was one of the big ones, but certainly the delay in timing is around the lag effect of farmers adjusting to milk supply, to the price, and slowing down milk supply. And you know, economists, and I'm one of them, is you look at it and you think, well, rational behaviour is that you start to see production slow down. But of course, rational behaviour from an economics point of view is different to actually what happens in human behaviour, which is that it makes sense to keep producing to cover fixed costs and at least make some contribution to variable costs. And what you also see is, particularly in Europe, and it did happen in 2009 and 10 as well, is that you've got different payment systems and you've got different motivations for people to stay on the farm and keep producing milk, and therefore you tend to find you don't get that supply adjustment. We still think it will happen because of some regulatory changes that are coming through, but it's much, much slower. And other things that have happened that were unforeseen is that we're actually seeing companies, and Fonterra is no different in this regard, companies supporting farmers through extraordinary payments over and above the milk price. So again, that signal to slow down production is not getting through. We've still got it in Ireland at the moment, where Glanbia are topping up farmers on top of the milk price. The milk price is about 20 euro cents a litre, barely break even for anyone, but there's a 3 cent a litre effectively capital payment going out, and there's another 2 cents just top up going on to that. So effectively farmers are getting 25 euro cents a litre, which means they're not going to slow down production anytime soon. Now those things are, make it very difficult to forecast. So absolutely there's been a lot of things happen in the market that we didn't expect to see, and it's meaning that rebalancing is taking a lot longer.
Don't be shy, we've got time for another 2 or 3 questions.
You know, when the production does level off and everything sort of so-called, comes right again, isn't the world going to be geared up for dairy production to pump up overnight? Like if the milk price does level out and break-even levels out, it's going to be more profitable to make more milk. Will that not happen? And then we'll never get ahead?
Yeah. Look, I think it's dairy's always been an industry where it takes a while to ramp up, and there's a couple of reasons for that, and reasons why I think it's, we see it in places like New Zealand and Ireland much faster, but in other parts of the world, people are generally pretty reluctant to invest in dairy because it's It's a high infrastructure investment required for specialised use, so it's not like cropping where you can just move your harvester to somewhere else and you haven't exactly put infrastructure on the ground. And particularly in riskier parts of the world, you've got a long payback time on dairy infrastructure, as we all know. You're all in this business for decades and generations. And in a country, Latin America is a classic example, you're not wanting to put down assets on the ground necessarily if it's going to take you 5, 10, 15 years to get payback because the environment economically and politically changes so fast. The other thing I would say in terms of investment and ramping up is, in the case of Europe, environmental regulations are still coming thick and fast at them that will limit cow numbers in places like the Netherlands. And while they've used a window of opportunity to increase cow numbers over the last couple of years, regulations that come into effect next year will actually see those numbers need to drop. So there's different factors at play that I think will limit just an overall ramp up in dairy, which is still, as you all know, an inherently risky business, and one where, while it attracts capital, the returns on capital are relatively low and volatile. So I think that does just naturally inhibit the level of investment that we will see globally.
Yes, Hayley. The economists and the marketers seem to think that the demand is going to keep increasing. Production obviously outstripped the demand. And how much longer, like going back to your first question, how long is the bit that you said? It's going to take a little bit longer.
Yeah, a little bit longer, yeah.
Before they get into the balance game.
Yeah. It's really, we expect it'll be well into 2017 calendar year. Demand, you're right, has still been growing. It's just been growing more modestly in places like China and in many emerging markets. But it is still positive, and I don't want anyone to think that we've actually seen a contraction in demand here, because we haven't. Product and record volumes of product has been finding a home on the global market, albeit at low prices. So the slowdown in supply will be what gives the adjustment. So what happens in New Zealand here in the next 6 months will be a big determinant of that. Our expectation is that we'll see a slight decline over the coming New Zealand season in milk production. Less cows and costs trimmed, and particularly feed. So from that point of view, you will know better than I how production's tracking, and the world market will watch that very closely, and that will be a key signal. And Europe will be the other one. And our expectation is that European milk production growth will slow considerably. It'll probably still be positive through this next 6-month period, but then on a year-on-year basis start to turn negative into 2017. And partly that's because their production growth was so strong in the comparable months.
That's purely from an economist's point of view, because we've seen in New Zealand that the Fonterra or the marketers, the prediction was that Fonterra's milk would drop 3%. But as you just said before, New Zealand's milk's only dropped 1%. So farmers react differently to what you would think they're going to do, and I think Europe will do the same. But just changing the subject, what's the beef price going to do? Is the demand still there, and will the returns for beef stay where they are now, or improve or decline?
Yeah, I think beef prices I would expect to still remain quite strong. I don't think we'll see them go up significantly from where they are now, as much due to currency as anything else. The key concern around beef, aside from currency, is really what volume of product we will see come out of Brazil, particularly as Brazil is getting increased access into the US and into other markets globally. So that's one of the main reasons why I wouldn't expect significant further upside in beef, but would see it staying broadly around the same level.
Okay, well, I know some of you have got a busy day in front of you heading to the field days, and we promised we would get you out of here just after 8:30, and it's just gone 8:30. So I'd like you to give Hayley a big hand.